Hi, this is Joseph. Today we're going to talk about some more testimonials that I received from some brand new students. As a matter of fact, these students are probably no more than about 7 days old, and they're applying what I call the easiest trading strategy that I teach, which is the HL30 technique. What we are looking at right now is the dollar Canadian, and I want to show you two of the currencies or two of the currency pairs that some of my students specifically focused in on today. Today is Thursday. It's September 27th, 2012. And what we're reviewing, again, is the price action that occurred later in the New York trading session. So this being Thursday here, obviously we've already experienced the rollover. So here we have the previous day's high, and then we have the new or Thursday's high. Obviously, price was remaining pretty close to the highs yesterday as opposed to the lows from yesterday. This is what happened. The dollar Canadian pulled back up and tested the previous high here, the previous day's high. And then we wait for that candle pattern. This is our candle pattern. This is our entry. Now our entry, and this is exactly what some of my students did, got in at approximately 98.37, which was on the close of that candle right there. That's our signal candle. I just had to move this arrow indicating the exact price over here to the right because these candles were in the way. I wanted you to see what the exact price was. So we're selling this pair. It's basically reversal. So we're trading the HL30 inside of consolidation. Now we take a 20 pip target and we use a 20 pip stop. So with an entry of 37, our stop is 57 and our first target is 17. You can trade this technique with just one lot, but I do recommend using two lots, and I'll show you exactly why. If we enter here and you're using two lots, of course price moves around a little bit and takes a little while, maybe about 2.5 hours before it drops. Again, this was later in the New York session on Thursday. Close the first lot at the first target, and then we set the second lot at a break-even stop so that if it comes back up here where we enter, it just closes the trade and we still lock in the profits from the first lot on that first target, 20 pips. But if there's a trend, and this happens very often, we close the first lot. This is exactly what my students did today. They closed the first lot here and let the second lot run all the way to the second additional target, which was another 20 pips. So we closed the first one here at 17, close the next one at 97. Now, effectively, what you're really earning is 20 pips to the first target, but 40 pips to the second target on that second lot, because it's from the entry to the final target. So effectively, there's almost 60 pips profit in just this trade right here. Here's the same strategy, but going in the opposite direction. This is the euro dollar. Again, this is a 30-minute time frame. Here's the previous day's low. Here's Thursday. Here's the low that it made during the later hours of the New York session. Here's that spike low. It comes within that 10 pip range. Here's our entry on the close of that candle. The entry was 73. This is exactly what my students did today. The entry was at 73 or 74. The stop is at 53. The first target is at 94. So this is approximately 20 pips. Again, using two lots, you could take another 20 pip target right here to 14. Again, almost another 60 pips earned here. Some of my students used this same trade today, the HL30 on the euro dollar and on the dollar Canadian, and they used it on standard accounts, and they earned just under $1,200 today. It's an amazing technique, and you have instant access as soon as you complete your purchase. You'll be using this technique by tomorrow. And please don't forget that there's a 6 months guarantee policy on this program.